Welcome to the Emotional Balance Sheet, the financial planning podcast for parents who are senior level professionals with kids in school or college. If you're tired of stitching together 4 different specialists to run your financial life, you're in the right place. I'm Paul Fenner, certified financial planner, enrolled agent, and founder of Tama Capital. I also have 4 kids, including a set of triplets, so I know the pace. Let's get into today's conversation.
Hi, and welcome back. There's a line from John Reed's book, Succeeding, which he wrote that when you first start studying a field or an industry, it looks like you need to memorize a million things, but you don't. Every field or industry has about 3 to 12 core principles, and the million things are just a combination of those principles. And I found a quote by Morgan Housel that points to this and applies to money. And he says, spending less than you make, saving the difference, and being patient is roughly 90% of what you need to know in finance. In health, sleep 8 hours, move a lot, eat real food, but not too much. But what's taught in college? What's taught in what do you see in mainstream media? Like how to price options or derivatives or supplements and hacks. The obvious takeaway to me is to slow down, stop chasing the complicated stuff, and focus on the basics. That's not the conversation I want to have, though, because if you're listening to this, you're not the person chasing hacks and supplements. You're not asking whether or not to invest. You probably know more about money than most of the people in your office. And yet, your financial life still feels harder than it should be. So I want to ask a different question this week. If the principles really are this simple, why does your life feel so complicated? So let's start off with a real world example of a family I've worked with. I've changed their name. We'll call them the Bennetts. She's a director of operations at a manufacturing company. The husband's a director at a regional healthcare system. They have 3 kids. The oldest is going into high school. And by any measure, like a lot of the families I work with, they're all doing well. Combined household is probably close to $400,000. Strong equity comp with her job. Plenty of cash flow. But when we first sat down, the husband said something I keep coming back to. And it was something like this. We don't think we have an investment problem. We think we have a coordination problem. And that's exactly what was happening. They had her 401k with a company match, which neither of them could explain. She had an employer-sponsored purchase plan that no one was tracking the cost basis on. RSUs vesting on a schedule that they weren't sure about. An old IRA she rolled over from a previous employer and forgotten, 5-6 years ago. 2 529 plans, a taxable brokerage account that had actually drifted to like 25% in cash because they had stopped reinvesting dividends in a few of the positions, and no one never noticed. An HSA that was invested, which is great, but was in a target date fund that didn't align with their time horizon. They also had a HELOC open during a renovation. So 4 professionals touching their financial life. A CPA filed their taxes, an HR rep helped handle some of the equity, an advisor at one of the big firms managing the IRA, and a loan officer at the bank with a HELOC. None of them knew each other. None of them talked to each other. Their question wasn't, what should we believe about money? They already knew that. The question was, is anyone actually steering this in the right direction? And I think this is where Morgan's quote actually applies, but maybe not the way it sounds at first. Reed and Morgan's point is that a small number of stable principles govern fields or industries, and everything else is implementation. So in money and financial planning, the principles are stable. Spend less than you make, save the difference, Match the time horizon of your money to the time horizon of your need. Don't take risks that you can't recover from. This is my favorite. Don't pay more in taxes than you have to. And probably most importantly, stay patient when things get noisy. So you can list 7, 10, 12 principles, and they're roughly the same year over year. But what changes is your life. When you're in a senior level role with strong income, equity comp, 3 kids, a tax situation that no longer fits inside TurboTax, retirement accounts, HSAs at multiple custodians, 529s, inherited IRAs, you name it. Your life has a large surface area. But it's not the principles that got more complicated. It's that the number of places you have to apply them to went up. And they went up a lot. What I see happen, especially with senior level professionals, is that they kind of confuse the two. Your work life rewards complexity. So when your financial life feels complicated, you assume the principles must be more complicated as well. And you start chasing tactics. Roth conversion ladder, direct indexing, the mega backdoor. Should we dollar cost average or lump sum back in with excess funds? Those aren't principles. Those are implementations of a principle. And if you don't know which principle the tactic is serving, the tactic doesn't help you. It just gives you something else to read about or another thing to track, another decision to defer. And as most senior professionals I work with, they don't need a longer list of principles. They need somebody applying the few that they already believe in across all of their accounts, their employers, their tax year, their kids' college conversations, their estate documents. That's the actual job. Not new principles, but instead better application. And I'll give you a personal version of this. I've held it for years that the window you have with your kids at home is finite. And once they're gone, you don't get that time back. My triplets graduate in 2029, so 3 more years. Mackenzie, a year behind them. So the math isn't hard here. The principle is clear. The implementation is where it breaks. The principle would say, close the laptop on Sunday afternoon. The implementation says, just one more research report, one more thing for Monday. The principle would say, would be at the swim meet without your phone. The implementation says, the phone is in my back pocket in case I think of something. I know what I believe. The doing is slower. And the same thing happens with money. The principle is usually clear. The application is where we lose months and sometimes years. So one small thing that you can take away from this conversation this week is don't make a new financial plan. Don't read another book, but instead sit down for about 20 minutes and write down 5 to 8 principles you actually believe about your financial situation. Not what you think you should believe, what you actually believe. For example, I want to retire by 60, having the kids graduate from college without too much debt. I want more time than I want a bigger house. I won't take risk I can't recover from. I want my work to feel optional by 55 or 60. Whatever they are for you, write them down. Then look at your last 6 months of financial decisions, your bonus allocation, 401k contribution rate, your cars, the college visits, the vacation, the job conversation with your spouse, and ask which principle each decision served. If you can't match that principle, that's the gap. The gap isn't your strategy. It isn't your portfolio. Your principles aren't being applied. They're just sitting there. So you don't need more principles. Just use the ones you already have, the ones that you wrote down. So if you're a working parent and something landed for you today, I'm working with new families at TAMA. The best place to go to is tamacapital.com to schedule a conversation. The link is also in the show notes. That's it for this week. We'll see you next time. Now for the fine print. This podcast is for educational purposes only and is not personalized financial, tax, or legal advice. Before making any decisions about your specific situation, please work with a qualified professional. Tama Capital is a registered investment advisor.